Hey guys, welcome to the SBA 7A Loan Program live Q&A session. We're just giving it a few more minutes for a few people to join, but we'll go ahead and get started with just some intros of who will be speaking with you today. So my name is Abby LaRue and I'm a Senior Relationship Manager here at Fundera, and I'll let Tyler introduce himself as well.
Thanks, Abby. My name is Tyler and I'm a Senior Credit Analyst here on the SBA and Bank team at Fundera.
Awesome. So today we are going to have a live Q&A. So as you start thinking about your questions, feel free to drop them in the chat there. There's a Q&A function down at the bottom. And before we get to that, what we're going to just run through is a general overview of the SBA 7A loan program, as well as some of the specific financing related to COVID-19 relief. And then we'll also go over some of the basic qualifications at a high level to know if this is the right product for you. And then we can get your specific questions answered in the Q&A. So just to start off, many of you are, I'm sure, familiar with this after attending some of our other sessions, but the 7A loan is run by the Small Business Administration, the SBA, and these are specifically for small business owners, and they go up to $5 million. And have lengths as long as 25 years. One of the key things is that the SBA loan is really able to give you the low monthly payments because of the longer term and relatively low interest rates. So the interest rate will be set at the market prime rate plus a 2.75% spread. So right now that interest rate is at 6%. The 7A loan program is one of the most popular programs because it gives you some flexibility in the type of projects and plans that you want to use with the working capital that you'll receive. And then we just want to note here that Fundera primarily works on the 7A small loan program, which has a maximum 10-year term up to $350,000. And so we also wanted to touch on, has this program changed or remained the same since post-COVID outbreak? And so what we have here is basically the SBA 7A loan program is a permanent program, and it has remained in place throughout the duration of some of the other more temporary government programs that have been offered during this. But the SBA 7A loan is what we really want to make sure everyone understands is this is permanent and this is here to stay. And that's why we want to bring just some more awareness of what to look for and how to determine if your business is the right fit. Since COVID, banks that we work with, and pretty much all banks around the country, have layered on some additional requirements in their underwriting qualifications just to make sure that they're doing their due diligence up front. So we have seen that there's a little bit more intricate underwriting process, which we'll get into a little bit later. With the qualifications. And that's what this last bullet point here is, that some banks have tightened their risk policies and what they're comfortable lending to. And that's why working with someone like Fundera, where there are we work with multiple banks, is a really great way to go.
So now I'm going to cover whether or not the 7A SBA loan is a good option for you. Something to keep in mind is that this is a good loan for mature businesses needing additional capital to execute on growth plans, cover operating expenses, or refinance more expensive business debt. Now, what exactly does that mean? Some of the qualifications for a 7A loan is going to be 2 years in business, a personal FICO score over 680 at least, a profitable year-to-date P&L statement, this year and last year, acceptable business and personal debt to income ratios, and a demonstrated need and use for funds. Some other qualifying clarifications or considerations that we should keep in mind is all owners greater than 20% ownership must be guarantors. If you own multiple businesses, all of them will be considered in the qualification cash flow analysis. So you can't separate out your businesses. If you own multiple, they are going to take it into consideration. Some auto disqualifications, unfortunately, are going to include pending legal action, both personally and for the business. This includes everything such as like civil lawsuits, divorces, stuff like that. If your business derives 50% or more revenue from an SBA ineligible industry, such as renting out property, flipping houses, anything that's federally illegal, it's going to be an auto disqualification. If you've ever defaulted on an SBA or government-backed loan, it'll be an auto DQ. And then finally, if you have an outstanding tax lien, unfortunately, that is going to be disqualified until you get that cleared. None of that summary is all cleared up, and we went through a little bit of the details of the SBA loan. We're open to all questions you may have. So as Abby said, please go ahead and put them in the Q&A box at the bottom of your screen, and we'll answer them live. I see we have one question already, and I'll go ahead and just answer that here. Question is, I applied for the SBA loan and got the grant. I want additional funding as a loan. Is that an option? Can I apply again? So by this question, I'm assuming you applied for the EIDL, Economic Disaster Relief Grant. That is a relief program from the SBA, and similar to PPP, it's a one-time deal. This is a 7A loan, and this is different than that. If you already have an EIDL grant, it is possible for you to get a 7A loan. However, there are different considerations.
Awesome. And I want to go through, there was a pre-submitted question, which is asking, I have already applied for and received a PPP loan, payroll protection loan. Can I still apply for the 7A SBA loan? And is it forgivable as the PPP loan is? So I'll touch on multiple ones of those questions. So congratulations on getting the PPP loan. That's a great thing for your business. And the answer, if you can still apply for the 7A loan, is yes. You can still apply for the 7A loan if you've received a PPP loan, as well as if you have received an EIDL loan, the Economic Injury Disaster Loan. What the banks will want to look at and what they'll need some clarification on is if you are, or how you were using the PPP loan, if it was able to be fully forgiven, or if there is going to be that monthly payment starting, what it was used for, and then they'll look that you have a different use of proceeds for the 7A loan. So it's going to be more of a challenge if you are looking for the SBA 7A loan because you want to basically cover for payroll. That'll raise some red flags. And the PPP loan is a forgivable loan if it's used for specific things. The SBA 7A loan is not a forgivable loan. The typical term is a 10-year term, and that interest rate right now is at 6%. So it does leave you with lower monthly payments than other traditional small business financing. And one thing to note is right now through September 27th, for any loans that are originated before that point in time, the SBA is going to be covering the first 6 months of payments. That is not a deferment, that is a fully paying for that on your behalf as business owners.
Great. Hopefully that was helpful. We have another question here. Would you go through the qualifications again? So I'll go ahead and go back. So I could give some more detail on these qualifications. I know it's very broad and we went through them quickly. 2 years in business is going to be a minimum requirement from the SBA. So you need to be 2 years in business and at least 2 years of operating revenue. So you can't form the business, do nothing for 2 years and then apply. You need to be operating for 2 years. Personal FICO score over 680, that's going to be a hard requirement by most banks right now, just because of COVID and everything. They are required to ask for a higher credit score for these loans. A profitable year to date this year and last year, that's going to mean a profitable profit and loss statement. The SBA can only lend to companies that are profitable both this year, so up to, it's July 2020, so up to July 2020 and all of 2019. This is going to be a base requirement from the SBA as well. Acceptable business and personal debt to income ratios. This one's very broad and a little bit more complicated. We have some pre-recorded videos that go more into detail on these debt to income ratios, but broadly put, the SBA does require certain debt to income ratios in order to qualify. This is going to make sure that you as a borrower and your business have enough income to cover all of the debt that you have, or all of the debt that is being paid out. Finally, a demonstrated need and use for funds means that the SBA needs to lend to someone that has a use for these funds. It can't lend to people just for them to put it away in a bank account to save for a rainy day. They want to see this capital invested in businesses. They want to see businesses grow from this and use it wisely. And so they are making sure that all of the appropriate metrics are met in order to lend.
Cool. So one question that came in is the tax lien. We said that it's going to be an auto DQ if you have a current tax lien. And what the bank will need to see in order to proceed is that that has been fully settled. And so that if there is anything outstanding, that's been paid, no matter if it's federal or state. If it's a federal tax lien, that tax lien is going to need to be completely removed from your record. If it's a state tax lien, which it looks like you're currently disputing that, that will need to be resolved before we're able to proceed, and we'll need to prove that that has been satisfied, like either paid in full or it's no longer on your record. And then another question here, I can go ahead and answer this one on, okay, so it looks like you received the EIDL loan and the PPP loan and would like to apply for the 7A loan. How do you go about applying? That's a great question. So with Fundera, what you could actually do, what I would recommend is going to our website, www.fundera.com, and you'll see that there's a button to start an application. And I would do that and put in your information there for your business, and you will be able to be routed to the proper team that can help you get started on that application. But you do not apply for the SBA loan through the SBA directly. What they do is the SBA does not do the lending of the money. They partner with banks throughout the whole country, and the banks are the ones that are issuing the funds to you as a business owner. And so it is beneficial because you'll be able to build a relationship with a bank. And then where the SBA comes into play is that the SBA guarantees that loan for the bank.
Awesome. I'm going to go ahead and answer a question that we get very common, actually. This person asks, what if you have a couple of MCAs? Will the SBA be okay to pay those off with this loan? Short answer is yes. The SBA is a great loan to pay off MCAs and shorter term debt that you may be paying a lot of money on. And it's actually one of the more common reasons to get the SBA is to take that 6-month, 9-month, 1-year term loan and spread it out over 10 years. And so absolutely.
Great question. So we have another one here, and the question is, how involved is the application process? That is a great question, and we do have some other pre-recorded sessions that go in more in depth in the application process. I would answer this in saying it depends on what your experience is in applying for loans. The SBA loan is more involved than, let's say, a traditional like online term loan or online loan that you would go about. There's a few different steps, and so when you come to Fundera, you'll first speak to a funding advisor, and they'll help determine if the SBA is the best option for you. And then they'll go about collecting a few documents up front, and this is to test if you do qualify, if we can pre-qualify you for this SBA loan. And those initial documents are things like your tax returns, some financial statements, so we'll need a profit and loss statement. We'll look at the debt that you currently have outstanding, and all of that will go into this pre-qualification. Once that's been provided, then you'll be paired with, and once that's provided and you are pre-qualified, then you'll be paired with a relationship manager. who will be your main point of contact while we work through the remainder of the application process, which there's a strong document collection period, which depending on your business and the way it's set up there, it ranges from about 20 to 30 documents that we will collect. And that's where you and then myself, because I am a relationship manager here, will work together to collect all of those to then ultimately apply with the bank. And then once we get your application over to the bank, it's typically about 10 days until we can go through their underwriting process and then come to a close.
Great. There is one question that I did miss regarding the qualifications that I'd like to get to very quick. Can you take out depreciation and amortization from the P&L to consider profitability? The answer is yes. Depreciation and amortization is something that we call an add back, and that's something that can be added back in order to help you qualify since it's a non-cash expense. This is something that, once again, is covered a little bit more closely in the pre-recorded qualifications that we have online. So I would encourage you to check that out after this webinar.
Awesome. So that answers we answered that one. And so someone asked, if your score is under 680, don't bother applying. What I would recommend is I would still go through the process of starting the application, and that'll connect you with an account specialist here at Fundera, a funding advisor. And what we really want to do here is basically provide recommendations and like education on how to get to the SBA loan, because this really is one of the top tier products in the country. And so we can kind of work together with you to see, okay, maybe why isn't your credit score at 680 and what can we do to get it there? And if you are in need of financing in the shorter term, then that's also something that they can work with you on seeing what makes most sense for your business.
So we just had a question come in. Is there any amount that you don't have to personally guarantee? So this is a question that's quite common. The SBA loan does require a personal guarantee for the entire amount on the borrower. So your business will be guaranteeing the loan through a corporate guarantee, and then you'll personally be guaranteeing the loan. That being said, you will not need any personal collateral for this loan. So you won't have to put up your house for collateral. You won't have to put up your car for collateral, as long as it's under your personal name. All business assets will be collateral, and you'll have to personally guarantee it, but your house will not be seen as collateral unless it's a business asset.
Then I see here in the chat that there is a question about startups applying, and what the SBA has put in place is that your business does have to be in business for at least 2 years before qualifying for the SBA loan. So if you are a new startup, that's going to be ineligible until you've hit that 2-year mark. There are different types of SBA loans, and you may have heard something about a startup loan that's tied to the SBA. Those are available, but one of the things that lenders really look at there are they have to rely on projections and the business plan and that type of stuff. And so at Fundera, we don't focus on those types of loans, but those are available in the market, just less common. And then there's a question about the 7A loan amounts. And so the 7A small loan, this goes up to $350,000. And so that at that point, that $350,000 point, anything above that, most lenders will look at taking personal collateral in order to back it up. Up until 350, anything below that, there's personal collateral is not going to be required. So pledging your home, that will not be an issue, or that will not even be asked of you. And so there is that differentiator there with the loan amounts.
Had another question come in. Can you use this loan to buy an office building for your business? So this loan is, as similar to the startup loan, is not meant for real estate purchases. There's a loan called a 504C SBA loan, and that is meant for real estate purchases. So that would be used for that, that specific use of proceeds.
I'll touch on a question that we also get quite often, and this question is, what are the fees associated with this loan? And there are some standard fees that the SBA charges, and this is basically to cover the cost of the loan program. It'll depend on the loan amount, but anything up and from like $1 up till $150,000, there's a 1.7% SBA guarantee fee. And then anything above $150,000 up until $350, that fee jumps to 2.25%. In addition to the guarantee fee, there is an application packaging fee, and that will range depending on the lender that we work with, but that ranges from $1,500 up to $3,000, also depending on the loan amount. And then lastly, the closing costs that the banks incur for some of the background checks and searches that are done on you and your business, those will also be itemized out in the final contract, and we see those typically range from $300 to $800.
Got a quick question come in here. I've reached out to 10 banks and lenders for 7A. None of them are funding SBA loans other than PPP at this time. Do you have a list that you can provide of lenders that are writing 7A loans? That's a great question. There are many banks that have decided just to write PPP loans at this time. We are working with banks that are currently underwriting and funding 7A loans. So to the person that wrote this question, please go to fundera.com and you could go ahead and apply and get connected with a loan specialist who will help you get set up with the 7A application.
Great. All right. Well, that is all the questions that we have today. What I would really recommend is if you did not get your question answered, feel free to join us next week. We'll be here at the same time, same place, and we'll look forward to answering those there. You can also stay tuned for a follow-up email today that will come to your inbox with just some more information and resources to do some looking into it on your own. So thank you so much for joining us, and we will talk to you, or we'll talk to you later.
Thanks all.